So the Q2 outlook for currencies. I think one of the main things we're looking for in the second quarter is a bit of pickup in volatility. We've got this market asking the big question of, is this Trump trade so-called going to engage after the huge reaction in the wake of the U.S. presidential election in November? Q2 provides some sense of an answer, I think, of that question after a rocky start to the new presidency. So for the dollar, I think the outlook is rather uncertain, but I think the one direction we're not looking for the dollar would be broad-based declines. I think the dollar has two ways it could go higher. One is we see more forceful policy making from the Fed. We see inflation and the other activity numbers in the U.S. remaining high or even picking up a bit, and this would put on more anticipation of rate rises from the Fed, therefore supporting the dollar quite broadly, and especially versus the Japanese yen in that scenario. If, on the other hand, we're seeing Trump bogging down, inability to make new policy, the market having to discount further all that anticipation from the Fed and from the impact of that policy, we could see the dollar quite weak against especially the Japanese yen, which is the most sensitive to these kinds of things, and especially the U.S. rate outlook, possibly even somewhat weaker against the euro, but we could see the dollar very firm against emerging market and the less liquid currencies in such a scenario. So the dollar outlook, I think, is very uncertain. It's going to key on the political situation, the policy situation, as well as the economic data. And one overhanging uncertainty is this U.S. debt ceiling process, which can get very tricky and could offer some significant negatives in terms of broad-based global risk appetite and sentiment. Now, for the euro, we're very positive on the euro going into Q2. We don't see this French election as a major political hurdle. We do have long-term questions about the EC's ability to taper, but if we're looking at a situation where the ECB possibly only looks to taper a bit into next year while hiking rates out of negative territory, and the EU economic data continues to perform, the euro is going to look quite strong across the board. Maybe less so in Eurodollar and a bit more so in euro versus the less liquid currencies out there. So a positive story for Europe. For the Japanese yen, as I indicated, I think it's going to key very much on as a mirror reflection of what's going on with the dollar. And elsewhere, the big question we have is China in Q2, and maybe more of a question for Q3, but we're seeing a big drop in liquidity in China. This has often led to a growth slowdown, and we think this really dramatic enthusiasm for risk appetite and global complacency we've seen in Q1, especially centered on the interest in carry trades and the great reflation trade that everyone is looking for out there. We could see that tempered in Q2 amidst all this U.S. uncertainty, and that could impact especially those economies that are most sensitive to China, the Australian dollar, for example, but as well just EM sentiment broadly may have gotten ahead of itself in Q1s and has really been strong except for that hiccup around the Trump victory in November. Let's not forget, EM has been very strong since the very early days of 2016. So perhaps some consolidation on some of these global carry trades in the second quarter.